All right, party's over. Back to work here tonight. It's that time of day again here after all. Welcome back, of course. It's Tuesday evening. It's May the 12th, 2020. My name is Joseph, and welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow's trading session. And I got a great video in store for you guys and gals tonight. The charts are all prepped up in the background, as you can see. Got the oil, the S&P, and the gold on the video tonight. Got a lot of failed rotations. It's what didn't happen today that might be the most important clue for tomorrow. We're going to break down the entire plan with all the charts for tomorrow's trading session. We also want to make sure we check the calendar for tomorrow too. We got some big Fed speakers tomorrow, got some big news tomorrow, and I want to make sure you know when to be at your desk to find the best setups. So charts are ready. The schedule is ready for tomorrow. I'm glad to see you're here locked and loaded with me. Before we jump into the video tonight though, please make sure subscribe to this YouTube channel. I don't want you to miss all the good stuff we publish every evening on this video. And don't forget, if you have any questions, drop those questions in the comment section below. I'll circle back after I publish and get the questions answered. And as always, if you tune in every evening, if you rely on this newsletter to get your mind right and your charts right every evening, hit that thumbs up button for me. I really appreciate you guys subscribing, posting lots of questions, and of course hitting that thumbs up button for me if you find the video helpful here for tonight. But enough of the introduction. Time is ticking. Let's get this video started tonight. Let's grab the calendar for tomorrow so we know what to look at on the schedule. Grabbing the Econo Day calendar here for us. Tomorrow, of course, is Hump Day. It's a Wednesday. It's the 13th of the month coming at you right tomorrow here. We got really quite a bit of news here tomorrow, as you'll notice, right? We get the PPI number at 8:30 Eastern time. We get my boy, Jerome Powell, speaking at 10 o'clock Eastern, or sorry, that's 9 o'clock, JJ, right? 9 a.m. tomorrow. That was close. And then, of course, later on in the morning, we get that petroleum status report at 10:30 Eastern time. Now, the big news for tomorrow, as you can probably imagine, is that Jerome Powell speech. The rumor was he was going to be talking about negative interest rates, but I'll tell you, after we heard from a lot of Fed speakers today, it seemed like negative rates were off the table. The U.S. President Trump, he's made it very clear he feels like it would be something very important for the U.S. to have negative rates, but I'll tell you, after hearing a lot of Fed speak this morning and this afternoon, it doesn't sound like negative rates are going to be anytime soon in the U.S. So we may not hear anything about the negative rates, but you know what everyone's going to be listening in, and that is tomorrow morning, 9 o'clock, when he speaks. Did the stimulus package work? What do they see as being the next leg, right? What is the next options? Whatever he thinks is the next couple options they have, what other ammunition does the Fed have? That will be what all of us are listening in tomorrow for that 9 o'clock Jerome Powell speak. Now, like I said last night, today we had that 10 o'clock testimony. We saw how slow the market got during that 10 o'clock testimony. We may see more of that here tomorrow, right around that 9 o'clock. Now, what that means is you're going to want to get there early and stay late tomorrow, probably, I would assume, for the best setups for tomorrow. So hopefully he doesn't hog too much of our time tomorrow, 9 o'clock, maybe till 10:15, 10:30 or so, and hopefully we can get some setups before he speaks tomorrow. After all, we got that PPI number at 8:30 Eastern time. And guys, don't forget, whenever we talk about PPI, CPI, any of those inflation reports, you got to be thinking currencies, you got to be thinking gold. So we're definitely watching the yellow metal tomorrow early in the session. And of course, later on in the session, what I would imagine we'll see a couple setups early, but I would imagine the meat and potatoes will probably be, again, 10:15, 10:30, 11 o'clock tomorrow. Yeah, that's where I would assume you're going to get some of the best setups here after he speaks tomorrow. Now, tomorrow morning, of course, we got that inventory number, the petroleum status report at 10:30 Eastern time. So we know we got to be careful on crude oil, but gold and of course on the Eminis, we definitely want to be ready. I don't like trading the oil report. I really, my goal on a Wednesday is to get those setups on oil before 10 a.m. You know, my cutoff on Wednesdays is 10:15 because we got that news report at 10:30. I'm not a big fan of trading oil after 10 o'clock on Wednesdays. It gets a little bit whippy. Well, first of all, it slows down usually dramatically into that news report at 10:30, and then it just goes, you know, as you probably have noticed, it goes pretty much haywire. Now tomorrow, you know, we may see a little bit of a sluggish response to it because the markets have been so, you know, the oil market's been so beaten up. But typically that time between 10:15 to 10:45 really dicey on the oil markets. So get to it before 10:15 or after 10:45. I would discourage trading in between those times just because of that big news report at 10:30 Eastern time. And who knows what we'll get out of it tomorrow. It may not be a very violent reaction because of all the other stuff going on right now. But at the same time, though, if they hit us with a big number, remember just yesterday, we heard about the Saudis cutting 1 million barrels per day. Will that be enough to put a dent in the excessive amounts of oil we have flooding the market right now? That'll be something people are watching for here tomorrow at 10:30 Eastern time. But again, I would imagine, though, the best setups tomorrow before Jerome Powell speaks, after Jerome Powell speaks, and of course, we'll be tomorrow morning and every morning in our trade room, bright and early, 8 o'clock Eastern time. I would love to have you there with me, trading this strategy with me tomorrow morning. You got to be a member, and I'll put all the information for you guys to get registered as a brand new member down the description of this YouTube video. If you're on the blog right now, I'll put a big button for you right below the video tonight on the trading blog to get registered and come join me tomorrow morning in our trade room. So now we know the plan here for tomorrow. We got some big news coming later on this week. We got jobs on Thursday, retail sales on Friday. We'll talk more about that obviously tomorrow night on the next edition of our newsletter. But in the meantime, though, we got some work to do here for this evening. The charts are all prepped up. As you can see, we got some oil, we got the S&P, and of course we got the gold, the yellow metal on the docket here. A lot of rotations, a lot of range rotations, failed rotations on the charts here. Why don't we start off with oil? Oil is, of course, on everyone's radar right now, and it really is the story of what wasn't today on the oil. You know, the last time we spoke about oil, we had that big pendulum swing, and we were anticipating that this failed rotation. Remember this last night, right? I had that. Right? Where is the rotation down here? We anticipated that this thing would rip higher, and they did. They definitely got that strong move up, right? And buyers were able to pick the bottoms on those hidden channels. But the problem, though, is they didn't go anywhere. You know, when I was a kid, I would say the buyers whiffed on this, right? They swing and a miss. They failed. But this is pathetic, right? The buyers had this on a silver platter, and they couldn't do anything with it, right? They had that big, strong run up, beautiful hidden channel. You can see they were all waiting to hit it, but they failed, right? They couldn't run this thing back to retest those highs that we had expected. So what we expected to have happen, we got about 3/4 of it. We expected to see that lack of rotation. We expected, in this course, from last night's newsletter, but they're struggling. And so now, knowing this now it looks like what we're really dealing with here is just one big triangle, right? Got my triangle high, my triangle low, and I'd be surprised at this point if we don't get a pretty good tumble here back down, right, to retest the low of that triangle. So at this point, the buyers had their shot and they failed miserably. I would expect now that rotation back in the opposite direction. So really at this point, I'm kind of wondering, you know, do we pop higher here? What's the plan there? Do we collapse and run lower? What's the plan there? Or do we slip into the range and get sideways here, right? What's the plan? What's the plan there? And then, hey, maybe I'm wrong about this. Maybe the market, maybe the buyers are just waiting for me to put my foot in my mouth and they're going to jump up here. We definitely want to be ready for if they, I mean, who knows, right? we live in a pretty crazy world right now. They may have some news that comes out, right, over Asia, over London, that may send this market higher. I do know where the buyers want to go. They want to get back to that 28 area, so we definitely will be ready here for that. So I'm anticipating another rotation back down to retest the low. Hopefully this time the sellers can show the buyers how it's done. The most important thing, of course, whenever I have a range market, I want to stay out of that middle, right? What does a range tell me? Buy low, sell high, avoid the middle. So we call that the no trade zone. I've got my sell zone up overhead. I got my buy zone down underneath, and we're trying to get that rotation going back down in the other direction. So what's the plan here right now? Now, the first thing I'd like to look for is a possible trap. You'll notice that very strong move down, right? That strong shot lower here. What I'd like to do is if this market starts to pull back here for me, you know, you could argue with the fact, you could argue that this is a new range. The problem is I just don't feel that as the new range. I think they struggled the highs there. I think the buyers are doing a great job at keeping it, you know, keeping the bleeding to a minimum right now. But I just, you know, you could easily argue with me and say, no, wait a second, Joe. This is a bull market today into a brand new range. And you might be right about that. From what I almost moved that range up here, but my gut tells me here that's not the range here. We're going back into that previous range at 25.67 to 25.14. But you know what? As any professional trader will tell you, you always want a CYA, right? You always want to cover your behind. What if we do have, right? What if I'm wrong about that range, right? What if the range is above this? So we got that big strong pull up, right? That push down. If we do make a run higher here now, I'm looking for a very specific type of setup over here. You'll notice I got that trend line coming down overhead. That's going to be really important because as we go back up, I'm going to look for a trap on this. Really, any trap will do. As we go higher, and this might jump a little bit higher here, right? 1 and 2, but I'm looking for some sort of trap high. And this will, what I'll do is I'll call this a two-try trap. It's not really a two-try trap. It's kind of a nested failure, but I'm anticipating here there may be a range here, right? So if we do end up popping, right, we don't keep going lower here. I'll cover that in a second. If we do end up popping here, watch as we come back. Watch those buyers try once, buyers try twice, and, you know, double top or trap off the high, something that allows me to get some sort of protection, right, away from the potential of this being the bigger range here, right? So that is my first setup I'm watching. It'll be basically, it's kind of like a crown reversal. It's a nested failure, but I want to make sure I have that trap high. Now, what if we don't, right? What if we open up and we keep bleeding lower here? This is where I think the best setup will be here for tomorrow. I hope we'll get it. I'd like to draw that trend line off that low. You can already see those two tops over there, those lower highs. That's what kind of gives me the thought here now. We'll get that pullback or get that move lower. Then imagine now that moving average coming down, and imagine now we pop back up, buyers come in, they think this market now is reversing. They try to buy that pullback and they're walking right into, it's a trap, basically, right? It's, well, not technically a trap, but it's a buyer failure, right? Imagine now we pop up, right? Buyers make a pop up here. They try to buy that pullback. We know exactly where those stops are, right? Now we know where stops are. We've got all that momentum now carrying us lower. I'm going to sell right into those stops. And then hopefully we'll get one more shot at it for a pullback setup. So that would be one of my favorite combinations, a buyer failure into a seller pullback for that run. And of course, the goal would be the target being down to the low of that, right, of that big triangle, right? Like I mentioned earlier, the expanding triangle, of course, right? So that is something that I'm watching here as well. Now, the bottom may drop out of this, right? I mean, in all reality, this thing may not bounce, right? It may just collapse. So if it does collapse, move that off here for a second. If it does collapse, there are two strong patterns I'm watching for. One would be a strong move down, a pullback to the moving average, and a strong run through. Now, what do we call those? 1, 2, 3 breakouts, 1, 2, 3 reversals, right? 1, 2, 3 move. Once I see that, now mark up that low, mark up that high, hidden channel pullback, and hit it. This is a very reliable pattern, very reliable after, that's the key here, after we hold that first pullback. I'm not quite interested in the first one. The second one, absolutely. What else can we do? What if this thing just starts to dump, right? What if those, right? What if it pulls an S&P? What if it pulls an equity index, right? What if it drops like the Eminis did this afternoon and we see this big, right, run going lower? If it really starts to run, watch out for that two-try trap. It's a shallow pullback, a lower low, shallow pullback, lower low, trap high. Everybody will be waiting to hit that because that'll be the only real option you get to sell relatively high. Okay, so watch out for those moves as we go lower. So now we get a pretty good plan there for all the sellers, right? If we go up, it's going to be a trap high to avoid the potential of my range overhead. If we drop, looking for that buyer. If we drop, grab that again, right? So again, and again, right now I'm just guessing where that will be. I know the top is. I know like a low will be. We go down, we pop up, buyer failure off the high of that channel, or right, we make that big descent with the 1, 2, 3 breakout or the two-try trap. Now, don't forget, we're going to trade all this stuff together tomorrow in the trade room, right? You and I will do it together as the markets unfold. If you're not with me tomorrow, the next best thing I would recommend is grab our free trading course. I'll put a link up here, a little button pop up there in the upper right-hand corner for our free trading classes. If you're serious about your trading career, but you're not with me tomorrow morning as a member of our trade room, the very least I would recommend today is grab that free trading class, that little pop-up that came across the screen there in the upper right-hand corner. That will teach you my favorite trading strategy, my 4 entry setups, and I'll show you hundreds of ways to use those setups on our favorite futures markets. It's a great, and it's free, right? Nothing better than that. So pause the video if you need to, grab that free course linked up in the upper right-hand corner, and I'll see you on the inside, right, of our free trading classes. Now, we've talked about the sell side. How about the buy side? How could I be a buyer on this market right now, right? How could I buy this here? Well, the first thing is we could see a reversal, right? We could see a strong move up. We could see a pullback to the moving average. And instead of those buyers failing and us selling it back down, they may hold it, right? And they may get that jump. Now, where's my objective? My objective at this point is to get back to retest those big highs, right, at 28 even. But remember, we're very strong to the downside right now. So I cannot trust that first pullback. I've got to get back above the moving average. I got to see a strong jump, right, off the EMA, and then I can mark up that high, I can mark up that low, and I can buy the next pullback. This is exactly what I always talk about on this newsletter. You can't trust that first pullback, but you can trust the second one, right? You can't trust the first one, but you can trust the second one if they get that 1, 2, 3 momentum move. Now, furthermore, you know, maybe this is the point. Everyone comes roaring back in again and it races higher here. If it does start to rip higher, oh, sorry about that, wrong button there. If it does rip higher here, watch that strong move up. Don't chase it though, right? You don't want to chase it. Look for that shallow pullback, that higher high. Remember, strong move up, shallow pullback, higher high in price. Mark that swing low and give it a good whack, right? That is a very reliable setup. And we almost always see these hidden channels come together, right, for that entry. Look for that two-try trap pattern off the low of that new hidden channel. I should also remember too, if we do go back into that range and sit here, right? If we do sit, we sit on hands. We wait for the pop up. We look for those buyers to try to buy the pullback, right? And we sell into those stop losses, right? So buyer failures above the top of the range if we do sink back down into that trading range. All right, I'm feeling pretty good about tomorrow here on crude oil. The only thing I'm concerned about is that 10:30 news, right? 10:15 is your cutoff, and of course we'll be at our desk early tomorrow to make sure we do our best to get those setups early rather than late in the session on the oil for tomorrow. So oil is looking pretty good here. Failed rotation on oil. Let's see about the S&P, right? The S&P puking, going lower here. I tried to find a better word to describe that, but puking is probably the best way to describe this part and the imagery behind that. So what's happening right now, you probably heard about this, right? New China sanctions were introduced on the floor of the Senate today. You know, we've been talking about this for a long time, right? The last couple of weeks, we've been talking about these tensions that have been building up between the U.S. and China, right? Now we're hearing more about these new sanction bills that are starting to circulate to the halls of Congress, and so we saw them start to hit the floor here today. How far this will go, I don't know, but there definitely appears to be a bit of an a bit of a sentiment brewing here, right? That may pick up steam. We'll see. We know the U.S. President Trump has been critical, right, of China over the past few weeks. He's made that very clear. We'll see if the rest of the U.S. and the rest of the world gets on board with this. This may be a very pivotal part of the next few weeks here, and it may introduce here a bit of a new normal here, right, as we go forward. Now, the why is not really that important. What is important is this strong move down, right? That strong move lower. Now, with that strong move lower, anytime I see a strong move like this, I always want to think about there's probably going to be three potential setups here right now. One is, right, with that big strong move down, one will be a hidden channel. Okay, that's the one I hope we get. Okay, that's kind of the easiest one. The other one is going to be a spike in channel where it kind of keeps bleeding lower, right? A spike in channel. And the third one is going to be a strong move down into a range. So these are the three scenarios you kind of want to be ready for here tomorrow regarding the S&P, right? One is the hidden channel sell, right? The other, of course, is the spike in channel, and the third being the trading range. Now, I think the most important thing to recognize, first of all, if I zoom out a little bit on this, is where these sellers are trying to go. Now, if you look at the big picture on this, you can easily see there's a range right here. Doesn't look like that range is going to be the most important part right now, though. If I had to guess right now, I would guess that 2,800 is where everybody wants to take their targets here right now. 2,800, you remember that was a big gap from 2 weekends ago, right? That was 2 weekend gaps ago, right? And you'll notice, right, it is a major, major low on this. Now, I want you to think about this because we just saw an example of this, right? Let's go back real quickly here and think about what I said last night on the newsletter, right? Because on last night's newsletter, remember I was talking about last night? I said the bears took it, the buyers grabbed it, but they couldn't finish it. Remember that last night? And the lack of what? The lack of completion, the lack of rotation is what gave us a heads up of that triangle. And boy, did we nail that thing to a wall last night. Great work on that, right? So go team go on that. Very well done on that. Now, that was all prompted by failed retests. Now, look. What do you see right now? I see a strong move down. I see a very strong move up. And what the heck? They failed again. Now, think about this for a second. Right? That's exactly, it's a much bigger scale. It's a much bigger scale, but isn't this exactly the same situation, right? We saw right here. It is. And so as we go lower here right now, I'm anticipating, here it comes. Here's that bigger, right? Here's that bigger range. And so that's why I think this 2,800 area is going to be a big milestone here for those bears, right? You've got this Trend line coming up off the low, right? Trend line coming down off the highs. And you can definitely see a lot of bear momentum. But this is just one big, right, the kind of granddaddy of all the ranges here right now on the S&P. We've seen a lot of small examples of this over the past few days, right? Now we're starting to see signs this might be setting up for a much bigger example of that. So it's always amazing how, right, the stuff, the kind of the psychology of the market, right? The market psychology aspects that we touched on last night that told us well, maybe not exactly, but gave us a good, it gave us a good amount of confidence. We knew what didn't happen, and we could then interpret what that meant, right? We're seeing a lot more of that right now. So same idea from last night is now applying here for today. Okay, so knowing that, again, that was kind of a long-winded explanation, but that's why I'm looking at 2,800 and I'm not looking at that low, right, at 28.22. The low at 28.22 is there, but I think, that should be that. If they get all the way to 28.22, I would imagine the gravity of this whole thing will pull this down into that 28.08, right, 2800 area. So I want to make sure you know where that level is, because that may come in play here, right, for tomorrow. Now, I talked about 3 scenarios. One was the sell off the high of that hidden channel. You can see there's that hidden channel I've got drawn up there, right? So one of them is there, right? Love that area right there, because you'll notice you got that little tiny bounce, and you look left over there, and you got that prior swing. That's a pretty good looking spot there at that 28.70 area. I like that area. I also want to be just aware this market may keep kind of grinding lower, right? So that would be where your spike and channel comes in. And then at the same time, anytime we see this much of a move in one swing, you got to think sellers are not going to want to sell very low down here. Bears are not going to want to chase this, at least most sellers. We also may not see sellers take profit. It's very difficult, right? If you're short right now, it's very difficult to convince you to get out right now. Would you really get out right now? Probably not, right? Probably not. Not when you've got fresh new ideas coming out of the U.S., right? You've got a big move down. So the odds are pretty good we go sideways, right? A, because the sellers aren't going to want to sell this low. And B, if you're trying to convince the bears to take some profit right now, good luck, right? You take your profit. I'm keeping my sell, right? I'm keeping in this thing, right? That's the mentality that goes into this. So that oftentimes, with bears not taking profit and everybody paralyzed selling this low, we oftentimes begin, right, to go sideways. So that is something we want to keep an eye on as well. Now, really, at this point, this channel, it's almost an empty chart, right? Because if we keep going lower, then this channel comes down. So just kind of bear with me here. What I usually do on these is I usually try to draw off of these highs and then get that the low, but you'll notice, right, it didn't hold. It kept on crashing. So I've got to draw off of that low right now. And again, if this thing keeps going lower, it'll be a steeper channel. But right now, from what it looks like we're going to be somewhere right about, something like that. It'll be somewhere up there. What I really want is, though, I want to get up into that 28.67 area, right? I want to get up around these levels of resistance. Now, there's really probably 2 ways that will happen. Maybe 3 ways. One would be a two-legged pullback. I would imagine a two-legged pullback is highly likely on this. What I'll do is I'll draw that trend line up, look for the pop and then over. And remember, on these types of patterns, you've got 2 opportunities to sell it. You've got the test of that trend line, but then remember too, you've got stops sitting right below that low. I call these two-legged pullbacks, or 2LPs for short in the trade room. And of course, the best entry is off the underbelly of that trend line. But remember too, is that there are also stops sitting right below that low, because buyers are buying that pullback, right? Buyers are buying that dip, and once it fails, those stops will get run. So two-legged pullbacks always give us a couple different shots to get in on that way lower. Now, we also want to be aware too, we may just kind of spike back up here, get back above that moving average, and we may see a pretty easy setup here. We may get buyers trying to come in and reverse it. You know, the old saying is, the market's gone too far. It's got to go higher eventually, right? No, it doesn't. Tell that to everybody who bought oil at 20 bucks a barrel because it can't go any lower, right? Oh yes, it did go lower. It went quite a bit lower. So there's no reason why this market cannot go lower. I don't want to hear, well, I bought that pullback because, I mean, it can't keep going lower, right? There's a weekly pivot down here, right? That told me no, right? Unnecessary information. I don't care what support levels down here. This momentum is way too strong. I don't want to hear about the 20 moving average, the 200 moving average, the weekly pivot, some crazy Fibonacci calculation, right? This is the 2618 extension. It doesn't matter. We're way too bearish as we go lower. So I would hope that buyers, I hope you don't make that mistake, but I hope a lot of people do though, and try to buy that pullback because that's going to give you the ability now to sell right into those stop losses, right? Once those buyers try to buy that pullback, now we know where stops are. Now we know where the pain is. That's the key here, right? That's where those buyers go, shoot, they got me again. I'm so stupid. Why do I keep doing that, right? You know that negative self-talk you tell yourself when you knew better, but it's almost like your finger has a mind of its own. We've all been there. I was there 15 years ago, right? I just know better now than going against the momentum of this market. But you know what I'm talking about, right? When you're a rookie, it's almost like you get so focused in the entry pattern, you forget about everything else back here, like that big puke lower. Anyways, stops are right there. We can sell into those stops. We can then look for that pullback right as we go. So that's one of those buyer failures into a seller pullback as we go. Now, there's also a chance here, you know, easy come, easy go. If we were to V bottom on this and really punch as we go higher, no, that's not a reversal, but it is going to make me want now to look for 1, to look for 2, and look to sell off a nested. So if we do end up, if we really pop, you know what I mean? If it really punches, what you want to do is wait for those buyers here. Let them try once, let them try twice. I always should draw that trend line down off those highs and then just look to sell short right off of that trend line if it really does pop right as it goes higher. So hopefully at this point you can see those 3 different setups, one being that two-legged pullback, 1, 2, draw the trend line up and over from there, or do we poke our heads, fail and collapse back down, or do we pop right and then 1, 2, and then back down we go from there. It'll all be about how the market kind of pops up off of this low. Now, like I said, you might not want to hold your breath on that. You might not want to hold your breath on that pop higher here because we may not get that much momentum. The bears right now have these buyers pinned right to the mat, and so we may have to see that range form tomorrow. Now this range, I'm going to guess where it is. It might be down here. It might be up here. I don't know where that range will be just yet, but once we do know we have a range, once we start seeing double tops, double bottoms, or maybe we start seeing a triangle down here, right, with lower highs and higher lows, you know what I mean? Once that market starts to flatten out here, the next best thing we'll look for is we'll look for some failure patterns, right? So once we start seeing that range start to form, now that moving average flattens out, eventually what will happen is the sellers will run out of bullets down here and we can look for that pop. Now this is not a reversal, this is a profit taking pullback, right? That's all that is. We're hoping that the buyers think this is a reversal, they try to buy that pullback, and I'd like to be selling right into those stop losses. What do we call these? These are called 2-try failure patterns, right? They're basically buyer failures up above the high of that range. And keep in mind too, this pattern is very, very common in range-bound markets. I talk a lot about that in our free trading classes, which I mentioned earlier on oil, but I want to remind you again, if you want to get a much deeper dive into all of these patterns I'm talking about, grab that link that popped up in the upper right-hand corner. And don't forget, I'll put all the membership information, the free class information, all the important info down in the description of this YouTube video. So keep an eye out for that range. Another possibility here would be if this market rolls lower here. Let me get rid of this channel here, right? if we see this thing just kind of, grinding lower, Again, this happens a lot because nobody wants to really sell low. Nobody's taking profit. In these situations, you want to line up those lows up around that high. And what you want to remember is the rule of three. Right? You're not going to be able to really trade the first one, but the second and third one, right? Those usually they're small buyer failures off the high of it, right? Moving average comes over here. And every time we go above the moving average, buyers try to pick the bottom and they fail. Buyers pick the bottom and they fail, right? Now remember, that's not going to last forever. The rule of three is very common in the markets, ranges, channels. So based on the three tests, we usually see that big pop. This is the one you want to wait for, right? Save your bullets for this one. You'll go back to the base of that channel, the first pullback, that creates that little zone, right? I would call it a battle zone, right, on this newsletter. What will happen is we'll wait for that pullback up. That pullback is usually very strong. And it usually feels like, oh my goodness, we've reversed. We did not reverse. We're simply getting sellers taking profit finally. What happens is, as the market keeps running lower, eventually bears, they get out, right? And the market pops higher. When it pops higher, now we wait for those buyers to foolishly, regrettably, try to buy that pullback. I made this mistake so many times when I was a rookie, right? I would see this thing grinding. I would see a strong shot lower. I'd say, that's it. That's it. We've reversed. I knew we'd gone too far. And of course, I would buy that pullback off some random level of support that I thought was important because I read about it in a book I got off Amazon, right? And it fails right back down, right off of that EMA. It's a simple buyer failure to sell back down into that trading range, right? So that's the idea if we get that spike and channel. Now, at the same time, if things start really getting ugly here, right? If we come out in Asia, the market keeps on bleeding lower here, watch that shallow pullback. This will be the most aggressive one. Watch that shallow pullback. Watch that lower low. And in comes, who, right? That two-try trap. Now remember, this is a very aggressive setup here, which means you've got to open up in Asia and you want to see more of the party, right? More of the move going lower, strong move going lower. You want to get into this before you get back to that 2,800. Remember how this works. Strong move down, shallow pullback. The shallow pullback is usually the giveaway. It doesn't touch the moving average. That, to me, tells me bears are very aggressive. They get that lower low. Now, I always like to grab these off of some hidden channel. So keep your eyes open around those prior swings up there and give it a good whack, right, for that finish job down to that 2,800. So now we get a pretty good plan there, I think, once again here, right, for those sellers. Now, how do you buy this market? Very, very carefully, right? This is a great example. I'm not in the market right now for a crown reversal. Why? Because there's no turning point here. We are not at what we think is the end of this move. Okay, it's a very big move down, but we're not there yet. There's nothing that tells me here, right, that this market will be a buy here right now. Now, there's two things I'm looking for here to be a buyer. One of them would be if we did get that pop up, right? Buyers fail, we get that run down, but we don't retest. Okay, remember, what should have happened didn't happen. So we get the sell off the high, but we don't retest. What's going to happen now? Trend line. Yeah, buddy. That trend line now becomes our best friend. Now we've got one try. If the bears do it again, okay, this is where that trend line becomes your favorite, right? That becomes your closest friend. Seller failure off that trend line into a bullish pullback. Now I'm giving away a lot of my tricks here right now, right? But that would be the setup. It's a seller failure into a bullish pullback. Remember, this will take a long time, right? This will take a while to develop. You're not going to get this in a half an hour. This will take a few hours to develop. It will start with that buyer failure first. It won't retest the low. That trend line comes up. Now we pop up, the bears try it again. When they try it again now that trend line's in place. Seller failure, buyer pullback, and yoink, right back up, right, to retest that buyer target. back where we really should have finished off today's trading session. Now, that's one option. Okay, that will require a little bit of experience and patience. The last one, though, is kind of the obvious one, right? It's that 1, 2, 3 reversal. Strong move up, shallow pullback. The buyers don't fail this time, and they hold. If they do get that hold, now we're talking. Now we get a bull market again, mark up that high, mark up that low, and we find that new hidden channel. Where's my objective? Back up to reach the high, back up to get back into, right, that triangle. I'm not going to lie, that's going to take a little bit of heroics for those buyers here. So be careful trying to force that move going higher. But I think we're looking pretty good here right now, right, on this S&P as we open up right now going into Asia. What will tomorrow bring? A spike in channel, a range, a deep pullback? Only time will tell. And let's wrap things up down to gold. Right? How am I doing so far, by the way? How am I doing so far? Is this all making sense? I know I go relatively fast here because if I didn't, this would be an hour-and-a-half long video. So don't forget to grab the free course. How about some questions? Any questions so far? Drop those questions down in the comment section below. And what do you think, right? Thumbs up? Thumbs up on this. You enjoyed the video so far? If you're still here watching this video, we're 35 minutes now into this video right now. If you're still here, you are the people I work hard for, right? You are dedicated like I was 15 years ago. You get a great future in front of you. Hashtag 1%, right? Hashtag finish strong in the comment section below. Always appreciate you guys posting those comments, especially all my 1%ers out there finishing what they started here tonight. So, great to have you with me here still. What do we know about the gold right now? It's not about what did happen. It's about what didn't happen. Once again here on the gold. This is a pretty bare sign right now on gold. Looking at this chart right now, what do we know? Well, first of all, we got that range still, right? Yeah, old faithful there, right? Some right? Very familiar with that trading range right now. Boy, how about that trap? Right? How about that crown reversal there last night, right, on the gold there, ripping right back higher again. Mwah! Love that setup, again, at a major turning point, right? That's that crown reversal pattern we keep talking about. If you missed last night's newsletter, you definitely missed a doozy. We definitely saw bulls have control here, right? The bulls got control on this. Now, remember, if this is my range, if that is my range, and we reverse off the low of that range, we should have been way up, right? We should have been easily up into that 1724 area. I mean, at the very least, they should have at least given it a good try, but they didn't. You know, this is a very familiar situation, right? We should have got that full rotation and we didn't. What happens when we should have got bulls taking rotation, but they didn't do it? Very bearish. Very bearish. And what this tells me now is, a lot like on oil, it looks like this is now turning into a big triangle. And that now gives me a big old bullseye right down at those lows of that triangle. So now I've got to find an easy way to get in without getting too aggressive on this, because I can easily see there's opportunity here, right? But I got to play my cards correctly here, because I don't want to be too aggressive now, right, inside of that range. That's the big challenge I have, right? It's going to get a little bit chippy and choppy here, right, inside the middle of that trading range. So the idea on this one is very similar. The failed rotation, right? We didn't get the rotation off the low. It didn't, well, we did, but it didn't finish off the job, right? And this leads me to think now we've just got this big old triangle here, and they're going to finish off that rotation as we go. Now, there's a couple options here right now, and you can see I'm kind of piggybacking off of that same idea we had on the S&P, on the oil, excuse me, which is I'd like to be a seller here, but I don't want to sell low. I want to sell at resistance. So I'm trying to find a level of support so I can pin that baby up at resistance now. I've got this move lower, 1, 2, go, and I'm thinking this is going to be a great spot here, either for a bull trap, right, selling above, again, I'd like to see it just above the top of that range there, right, as high as I can get it, and that looks a lot like a 2-try trap pattern, doesn't it? right? Shallow pullback, lower low, two-try trap. That is a setup I'm watching here for tomorrow. It may not give me the signal candle I want. It may poke its head higher. And if that's the case now, it becomes a buyer failure above that high. That would honestly probably be the most reliable of the two, right? That buyer failure off of that high. Let me get rid of these areas here. You can see where they are. The chart is also, by the way, the chart is also posted on the blog right now below this video. If you're on YouTube, there's no charts involved here. If you're on the blog at sidewaysmarkets.com, our trading blog, you'll see all the charts are posted there for you. So again, this looks like strong move down, shallow pullback, lower low, right? Two-try trap. And I like the fact that we have that kind of hidden channel there, very similar we talked about on the oil earlier. Or, right, and I apologize, I'm repeating myself right now, right? Or do we pop higher here? We've got that level of resistance now overhead up there. So now moving average comes over. Buyers try, right, to finish off the job here. They try, they fail, and we're selling into stop losses of those buyers, right? A buyer failure pattern above that high, right? That is a great opportunity here. Now, we may also see here now, if the market really starts to aggressively run lower, right? Couple options here, right? So let's say, for example, the market starts to aggressively now run lower. I will definitely be watching for another hidden channel as we go, right? Poke our heads up, get above that moving average, buyer failure, and back down again, right? So watching for that as we go. Or, you know, I wouldn't be opposed either to a strong move down and a two-try trap. Shallow pullback, lower low, right? Trap high. As long as I can get in before we get down to the low of that triangle, right? All of those will work. So trap at the highs, buyer failure at the highs. I think the most reliable one here would be if it kept on bleeding lower, I can then grab that low here, extend out that channel, and then come in and sell off the top of that channel. And again, this would probably be a buyer failure pattern, right? As it kind of pokes its head back above the moving average, pop and sell into those stop losses, right? Or do we collapse on down? Moving average comes over, right? Shallow pullback, lower low. Remember, you got to get that lower low. Strong move, shallow pullback, lower low, trap high, hit it. That's a great setup. Love those patterns. But remember, got to be strong, right? Got to be strong as we go lower. So now we've got a pretty good idea for how I want to sell this thing. It's a range. I want to sell high, right? I want to buy low. So again, we go up, buyer failure above the highs here. Okay, I covered that already. You guys know the drill on that. Now, how could I be a buyer on this? What's a way to be a buyer? There's a couple ways to do it. The first one would be the most reliable, I think, would be a strong, a pullback higher, a move to the moving average, a pullback to the moving average, jump off the moving average. If I can get that 1, 2, 3 reversal, I can mark up that high, I can mark up that low, and as long as I don't get in too late on that move, right? I'm going to be buying right into that pendulum swing. I want to get it before that pendulum swing hits. Okay, that is a 1, 2, 3 breakout at this point into a hidden channel pullback, or a very strong move up. Don't chase after it, right? Wait for that shallow pullback, that higher high, and then, trap low, and that two-try trap. Remember on these examples, right? Don't forget, I do always like to grab those hidden channels. They really add another layer of reliability to those setups. So those are some options we're watching for as well. You know, and I also wouldn't rule out if the market went sideways here for a while. You know, imagine for a moment here, right? The market kind of goes sideways here and kind of sits for a bit. You know, if that's the case, then obviously 1, 2, 3 breakout is the name of the game. They're going higher. But if we do sit there sideways and we make that run going lower, right, that absorbs a lot of momentum. I'm still very much concerned about that big triangle low being the actual target. So how do we buy that? How do we buy when the market is anticipated to be bearish, but we know we're in a range, so we know there's a big magnet, right? There's a big magnet right back in that range here. What's the best way to do that, right? It's going to probably be something like this, right? Where you see that move down, right? It goes 1, it goes 2, double bottom, trap low. What do we call those? Nested failures, right? Crown reversals if they're at a major turning point like that, right? To buy back up again. So keep that in mind, being a buyer here off of that low. A lot of the concern I have is just the fact that if it dumps, it's going to make a run towards that low. So I do want to be relatively conservative, being a buyer in the way of that. So those are some options I'm watching for here now on the bull side. Hopefully we'll get that short off the high here. And, really, again, thinking about this as one big range, I talked about this last night a bit. You got to remember we are in one big range here. So if the market really starts to rev its engines, don't chase it, right? Don't chase it down as we go. You really got to be disciplined on that. You can get it the first couple pullbacks, but you don't want to keep the third or fourth patterns because it just looks like you're going to probably regret that, right? The way the market looks right now inside this big, fat, juicy range right now, right? So whatever goes up will probably come back down again. But, again, if we can see a nice, strong, bullish momentum move there, you should be able to get that first pullback. It's just trying to continue it, right? Trying to keep buying it up there. No. Way too much range-bound market to be buying high like that. So get it early, but not too early, right? Wait for proof of the breakout, get that next pullback, and then sit on hands and wait for the move going back down into that trading range. Boy, what a great session tonight. Always enjoy being here with you here tonight on the video. Thank you so much for sticking around all the way to the end. Now, don't forget to get registered for tomorrow morning's trade room. I'll put all the membership information for you guys inside the description of the YouTube video or right below the video tonight on that trading blog. Don't be afraid to call me in the office. I'll be here if you have any questions. Don't be afraid. Again, Joe, with that whitewash. Don't forget also, too, if you have any questions and you don't want to call the office, that live support tool is always there for you as well. And don't forget, if membership isn't quite right for you right now, at the very least, grab the free trial. It includes our free trading classes, a free pass to our trade room, hundreds of examples of how we apply our favorite strategies to our favorite futures markets. Man, oh man, a great day comes to an end here right now, but we're only a couple hours away from tomorrow morning's session. Hope I see you there with me. If not, come back and see me again next time. I'll be here tomorrow night like clockwork. I'll see you guys tomorrow morning in the trade room, 8 o'clock Eastern time, or we'll see you guys next time on the next edition of this nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.